Hello, good morning, and thank you for attending this installment of the Life Sciences Digital Transformation Webcast series presented by Moss Adams. Our session today is titled Prepare Your Exit, Strengthen Internal Processes. Before we begin, we will play a short housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our group CPE attendance sheet, available in our slide deck and handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Good morning, everybody. Thank you for joining our webcast. On behalf of Moss Adams, I'd like to welcome you to our 3-part digital transformation series for life sciences companies. All companies, regardless of industry and size, are investing a lot into their digital transformation. By using technology to automate processes and data flow, companies can run leaner, but there are risks. How do you coordinate the technology into your processes? What is your impact? What is the impact on cybersecurity? Is your current system sufficient, or do you need to make some changes? These questions are all interrelated, and we will address each question over the next few weeks. Today, in the first part of our 3-part series, we will be discussing how companies can strengthen their internal processes by utilizing technology to do more with less. Next week, in the second part of our series, our cybersecurity team will discuss strategies to improve your security posture and what all life science companies should be doing to protect their valuable data and IP. There are many bad actors out there looking to find and exploit vulnerabilities in your information systems, regardless of your online presence. These actors may steal your IP, financial data, or employee information and sit on it for years, and you may not realize it. The third and final part of our series will discuss ways to improve your IT systems and infrastructure. Companies are continuously implementing new software or subscribing to a new SaaS service. So how do you find comfort in making sure that you choose the best software for your current situation? When do you need to change or upgrade? And are you optimizing the use of your software? Our enterprise systems team will walk you through the process that they go through in helping companies figure out what systems are best for them. These 3 considerations are all linked together, which makes it all the more challenging. We will cover these 3 topics and work to tie these pieces together. Before we start, I would encourage all participants to use the Q&A feature during the call. To the extent that we have time, we will address your questions throughout the call and at the end. Today, we will talk about how companies can use technology to strengthen their internal processes. I will be the moderator, but the stars of the show will be Steve Fineberg and Pam Esparza. Steve is a partner in our consulting group specializing in our risk management practice. Pam is a senior manager in our consulting group as well, who also specializes in risk management practice. With that, I'll turn it over to Steve.
Great, thank you, Rich. We're going to jump right in today. You know, the speed and the intensity of changes brought by the COVID-19 pandemic and the rapid shifts in the economy have really disrupted staffing and increased the adoption of advanced technology, which has impacted internal controls. You know, effective internal control is one of the essential enablers for entities to grow with confidence and integrity in a multi-stakeholder world filled with volatility, uncertainty, complexity, and ambiguity. For accounting and IT, finance professionals, it's important that we understand that the upside that technology can present, but we also need to be pragmatic on what we can do with the resources that we have. It's important to note that typically life science companies run pretty lean accounting shops. These companies can utilize technology to improve or supplement their controls, but we can also leverage the benefits of digital transformation. Well, what is digital transformation? Come across several definitions of it, but managed to sort of piece together transforming business processes with technology as an opportunity to be more effective and efficient in operations and to enhance your customer experience. You know, customer here is used pretty broadly. As if I'm in the accounting department of an organization, of course, my customers are internal facing of the company. But there are several significant risks you might see or challenges that you might have as you move to a digital transformation. But of the top 5 digital transformation trends, according to Forbes magazine, the top 2 are number 1, move to the cloud or move to the cloud technology. And number 2, the move to a hybrid or work remote model. Based on the results of the pandemic, the vast majority of companies that we've worked with have already made these changes to their environment. So like the analogy of bringing a frog to a slow boil, it's happening around you, this digital transformation. But why is digital transformation so challenging? Well, there's a number of challenges that you might face in digital transformation. Number 1 is the investment and technology application costs. It requires your organization to be able and willing to spend on investments in technology. Additionally, change management in organizations is always a challenge. It's difficult in a changing business and with solidified employee habits to change and impact your culture as a whole, especially if it's ripe with risk. And there's limited understanding of the change, or failure to involve stakeholders could also result in poor communication and poor results. Lack of internal human resources to apply to digital technology. We're going to discuss the typical life science company and why internal human resources are a challenge. Another element of a challenge would be a lack of digital technology infrastructure. You know, if you don't have a robust internal team to implement the technology with a holistic view of technology, you're already starting at a point behind. And the lack of digital technology infrastructure and solutions as a whole, again, all become an element that we'll address in just a moment as we talk about life science companies. So these technologies, these challenges are real and relevant. Let's talk about how they affect a life science company in general. What are the typical attributes that we see of a life science company that would make it a challenge for digital transformation? Well, number 1, life science companies tend to have a low overall headcount. If you look at some of the recent IPOs or de-SPAC activities of companies, you'll see that the number of headcount from a life science company compared to a technology is woefully different. Far lower headcount in the company as a whole in life sciences, and primarily a low headcount in accounting. I'm aware of a company that went public recently with only 8 employees, only 1 of which was in accounting. That's a challenge. Another attribute of life science companies that you might find is centralized accounting and operations. It's very common for some companies to have multiple subsidiaries or to be strewn about. The vast majority of the life science companies that we deal with, especially here in the Bay Area, have centralized accounting and low complexity of operations. They address the low complexity of operations or low headcount by outsourcing a lot of these activities. So CROs, CMOs, outsourced IT, even outsourced technical accounting. These are all ways to leverage third parties to fill gaps where you might have a lack of headcount or reliance. Slow investment in technology. You know, life science companies, we're focused on the science, paying for the science, the disbursements, and the payroll and the headcount that comes associated with that. Not a lot of room to invest in technology tools. Additionally, based on the nature of life sciences, the vast majority of the transactions and activities are small volume, non-homogeneous transactions. Therefore, there's less of an activity that is relevant to automation and real-time processing as a result. So life science companies tend to have a struggle when it comes to leveraging digital transformation. And Rich, this brings us to our first polling question.
Sorry about that. I was on mute. So as mentioned in the introduction, this webinar qualifies for CPE, and you need to complete 75% of the questions. We have 4 questions for you today, so be sure to answer the questions. They're not terribly complex questions. But just to start off, to kind of get a sense of the audience, how many employees do you have? It's pretty self-explanatory, but we'll give everyone a minute to make sure that you have that you completed so that you can get the CPE. All right, we'll give everyone about 15 more seconds so we can move along. This question was pretty basic, and I don't think it requires a whole lot of thought, but in case you're wrapping up a phone call. So, all right, there we go. We have a broad range of responses, so that's helpful. So, Steve, back to you.
Great. Thank you, Rich. So in our digital environment, how do we address risk? We talk about, as we discuss the attributes of a life science company, there are some that in the context of moving to a digital environment and this remote environment that we're in, we may not be able to invest in some serious technology. Even though we want to, it may not be pragmatic or capable to do so. The work in accounting and life science companies, as I mentioned, does have some high volume, similar complexity, particularly in AP, but the vast majority of the transactions are non-homogeneous, low volume. We hear a lot about in digital transformation about such activities as robotic process automation and artificial intelligence. But as we noted, life science companies are there to spend on R&D and clinical operations, not invest in technology. So we've got to take a pragmatic approach to work with what we've got. This is where I would like to make a plug for good old-fashioned manual controls. I feel like as a quick caveat, we should mention them. Under no circumstances can one just blindly rely on technology. Any technology that gets put into place must be rigorously tested and periodically retested and monitored to ensure that nothing has broken or changed. That said, there's no substitute sometimes for a good old-fashioned manual control. And one can use technology, as I'll get into a little bit later, to use tools to supplement these manual controls. But there will always be instances where management will need to make a subjective conclusion on a complex topic. This must be done via some type of human intervention. Additionally, there are important controls that involve estimates or accruals and other such a dissemination of critical information that also relies on human intervention. For example, in a typical life science company with significant R&D spend, there's this meeting that occurs between the clinical operations folks and the third-party CRO folks in accounting to make sure that there's a meeting of the minds and that the amount of expense is in alignment with expectations and percentage complete. This is made complex by the inherent complexity of operations. There's moving parts, there's change orders, so it changes in the numerator and denominator from a percentage complete perspective. And basic third-party statements may not be reliable. Therefore, this rigorous third-party discussion helps ensure that information is presented correctly. Additionally, with the current state of cybersecurity, which is another topic in our transformation series, we're well aware of phishing instances and other types of cybersecurity issues where a fraudster will phish the company, access vendor information, change banking information, and the company unwillingly or unwittingly sends out a payment to a fraudster by mistake. One of the important recent controls involve validating that banking information. It's as simple as picking up the phone and making a call, and it sounds like such a silly, easy, pragmatic solution. But in this case, rather than have an automated solution, the most pragmatic solution is, again, to just pick up the phone, call the contact, and verify before you send off a 6- or 7-figure payment. There are other instances as well. We'll address those in just a moment. As we move to another area of risk and controls, Pamela is going to tell us a little bit about spreadsheets and end user controls. Pamela?
Thank you, Steve. So spreadsheets and end user controls are a significant part of management review controls and manual controls. However, the pervasive reliance on spreadsheets has really hindered the aim of digital transformation. And that's really just due to the limitations that Excel itself has. So some of those limitations are lack of standardization and the complexity needed to optimize outcomes. So because spreadsheets are used throughout different departments and for different purposes, it's difficult to create a standard that would be easy to apply or helpful to everyone, as well as spreadsheets being pretty static. So any automation in spreadsheets requires a lot of manual input, and that opens the door for a lot of manual error as well. Spreadsheets are also difficult to include in an IT environment. So because everyone has free access to Excel, and there's really no way to track where spreadsheets are used or saved, then that creates what can be referred to as a shadow IT. And so essentially IT doesn't really have a way to monitor or have IT general controls over those spreadsheets, and we'll dive into those in more detail in a bit. And then as mentioned, different business units use Excel, and they're embedded within different business unit processes. And so again, that just makes it very difficult to monitor and track those spreadsheets. So due to the manual input, spreadsheets are obviously pretty prone to error. There was a study done by the University of Hawaii, and it found that 88% of Excel have 1% error in their formulas. So the more data that you have in your spreadsheet, the higher the likelihood that there is an error in the spreadsheet itself. And those errors can be difficult to detect due to poor version and change controls that Excel has, in addition to the lack of security and the lack of audit trail. So if there is an error, it's 1, hard to track the error, 2, hard to track the origin of the error, and then 3, hard to track how pervasive that error is within the spreadsheet. However, spreadsheets are here to stay. I personally use spreadsheets all the time. So if you are in an environment that is spreadsheet heavy, there are definitely some things you can implement to help monitor those files. And so you can start with establishing an entity-wide policy. So that can include where spreadsheets are kept. There should be a central repository for especially spreadsheets that are collaborative or are key to your business, as well as how long those are kept and who has access. You can also maintain an inventory of all discovered, registered, and managed files. So when you're going through your inventory, make sure to include the purpose of the spreadsheet, the department that's using the spreadsheet, the file location, who has access to that spreadsheet, and then try to assign a risk rating to each of those spreadsheets. So the things that make a spreadsheet riskier would be the complexity of the spreadsheet. So if it's macros enabled, if it's very formula heavy, there's a higher likelihood that either the macros isn't going to work, or the formulas aren't working properly, or they're not working as intended. Also take into consideration the frequency of use of the spreadsheet and how often data is updated or needs to be updated. So if you're updating a spreadsheet daily, there's a higher likelihood that an error will be inputted in as opposed to a spreadsheet that you're only using once or twice a year. Also take a look at if it's pivot table heavy or if there's links to other spreadsheets. now you have to worry about the pivot table data updating automatically, or the source data from other spreadsheets also being updated and maintained and error-free. Any spreadsheets that are being used over a period of time, so maybe you have a spreadsheet that you have different tabs, and it's rolling forward information throughout the year, I can easily go into the January tab, accidentally type in a 0, and that error is going to flow all the way through December. And Excel doesn't have the functionality to detect that that is an error or that that was done. So take that into consideration. And then lastly, take into consideration any spreadsheets that are being used for journal entry support or for disclosures. Keep those separate from spreadsheets that are being used for operational purposes or for management decision purposes. Pretty much anything that an external regulatory party would look at, those will be higher risk, and there should be more rigorous controls over that. And so moving on to controls, make sure to implement version access, change and data integrity controls, and you can mitigate the risks that we just talked about. And so one way to do that is to baseline test each spreadsheet to ensure it's working properly. And the best way to do that is by verifying the original source data accuracy and then tracing inputs back to the original source data, as well as establishing procedures that monitor changes to inputs and logic. So again, if the spreadsheet is very formula heavy, make sure you're checking those formulas, that they're consistent, that they're being used correctly, that it's the proper formula, as well as if you have data coming from an external system. If you're plugging that data into your spreadsheet, sometimes the external system will give you a record count or a balance count. Use that to compare it to what you have in your spreadsheet, and just make sure that those two are always tying, especially if you're copying and pasting a lot of that data amongst different tabs or different spreadsheets. Just keep those checks going to verify that I didn't accidentally grab too much information or I didn't grab enough. And then lastly, restrict access to key personnel for key spreadsheets. You can also protect cells, especially those that have formulas in them or are fixed inputs. If you can't lock the cell, you can also highlight it, maybe have a legend saying, hey, please don't touch these cells, but just make it easier for users to come in and know which cells need to be updated and which ones need to be left alone, as well as password protect sheets and tabs as much as possible. Lastly, you can leverage Excel add-ons, embedded applications, and other software. A lot of these softwares have Excel functionalities, but also include that IT monitoring that I've been honing on. So one of the examples that we use a lot is Smartsheet. You're able to manage access, you're able to manage roles, you're able to track changes, you can set up notifications if somebody changes something, and it also has reporting capabilities that are very user-friendly. So with that, I'll pass it over to Rich for our second polling question.
Thanks, Pam. So our second poll of the morning is, how would you describe your digital maturity? All spreadsheets all the time? Primarily cloud-based applications with spreadsheet reports? Leveraging workflows and scripts? Or maximizing application controls? So there's lots of ways to answer this question, so we're just looking for everyone to answer it so that you get CPE. But in the meantime, Pam, a couple questions came in while you were talking. So people are listening, and they have some questions. So one participant said that they're struggling with Excel. So what software do you see that is most commonly used to replace Excel?
Yeah, so what we've been seeing a lot, and then I touched on a little bit that we personally use as well, has been Smartsheet. It really is essentially an online spreadsheet. It's collaborative. If you have the proper access, you can go in and it automatically updates. You don't always have to worry about not saving, which happens a lot too with Excels. It's in a central repository. You know where it is. If you have access to Smartsheet, you can restrict access even to Smartsheet itself, so you don't have to worry about people that shouldn't be having access to that data logging in. You can even create links. I can even set permission to people that have that link. And then, like I said, it has a lot of reporting capabilities. It has version control, and that's what we've seen the most often.
Okay. So another question popped in. What are you seeing clients do to manage and inventory their spreadsheets?
Yeah, so what we've, but like I said, the spreadsheets aren't going away. They're here to stay, and they're very helpful in their own ways. So what we've been noticing is moving more to a cloud-based environment. So rather than and staying away from people saving copies on their hard drives or saving copies of copies of copies. And so when you keep it all in a cloud-based form, so for example, Box or ShareFile, different systems like that, then again, it makes it easier to control that access. It also keeps up with version control. And so you're still using Excel, but you're using a software tool to help you inventory and manage those files.
All right, that is great. And we will close the poll. I think everyone had plenty of time. So still a little less than half are all spreadsheets all the time. So everyone has a way to go, but that's a terrific segue. So Steve, I think it's back to you.
Sure. Great, thanks, Rich. Well, if you do nothing but employ the spreadsheet controls that Pamela just talked about, you're miles ahead. So great stuff, Pam, as usual. So we've noted that in an advanced technological environment, sometimes a manual control is the solution. However, one can more reliably and consistently address risk if they can move to a more automated solution. This is where we move to more of the information technology-driven controls, which are not subject to human error, bias, or management override. Oops. We'll touch briefly on IT general controls and application controls. So you've moved to the cloud, you're working remotely, and it's very important that you don't forget the blocking and tackling involved with the IT general controls. If you're looking to control the eyes and arms or hands, the legs, whatever you want to call it, about accessing and seeing the data on spreadsheets, then ITGCs or IT general controls are the security that you're looking for. When we talk about IT general controls, we're talking about the overarching IT controls that relate to security, relate to change management, relate to IT general operations. Very important elements. But note that in a remote environment, it becomes even tougher to rely on soft controls. So typically we talk about what we've talked about in this presentation today has been hard controls, right? The transaction activities. But soft controls is more about the policies that relate to people, openness, sharing, competence, expectations, the things that you might have when you're sitting in an office right next to somebody. And so those are challenging if you don't know the folks that are working with you, if you're sharing data, if you're working on shared spreadsheets, et cetera. IT general control is very important to safeguard the spreadsheets, et cetera, that you have. But most importantly, as I mentioned with life science companies, is this heavy reliance on third parties. And so the question becomes, are you managing your third-party risk? If you're outsourcing your IT, if you're outsourcing some of your research and development and manufacturing, how are you managing these risks, which are still management's responsibility? Save yourself some pain in the audit process by primarily selecting vendors that would have a SOC report. A SOC report, formerly known as a SAS 70 or an SAE 16 or SAE 18, now just referred to as a SOC report. Again, if you have an opportunity to work with a vendor with that, it just makes your auditor happy and makes life a lot easier. But of course, we're not working in an audit-centric world. For all these systems, are you monitoring user access? Are you periodically reviewing that access? And are you employing the elements of least privilege? In other words, are you limiting user access to only rights that they need to specifically do their job and nothing more? And are you monitoring the systems by performing a self-review? In other words, are you authorizing and reviewing your own access? If that's the case, you need to revisit your internal controls. Without robust implementation processes to ensure that your IT systems operate in accordance with expectations and applying robust change management post-implementation, that'll help ensure that you don't derail your system by losing its integrity or its ability to function properly. Nothing really necessarily new here, but You can definitely gain some significant effectiveness and efficiency in maintaining your internal controls over financial reporting by IDing the steps that you would need to maintain this strong IT general control environment. So what are application controls? We mentioned IT general controls. Well, application controls include the safeguards related to specific computer applications. So there's overlap with the IT general controls, but these again are specific to an application. While you might have segregation of duties overarchingly as an IT general control, when you're referring to a specific application, it is an application control. There are several types of application controls that exist. There's input controls, which ensures the data is accurate, complete, authorized, and correct. And they guarantee the data feeds are fed into the system correctly. You have validity checks, which warrant that only valid data inputs are processed by the application and the technology. Then whether data is in motion or at rest, you have integrity checks, completeness and accuracy checks, output controls that might be considered forensic controls as well, but making sure that your outputs are accurate and complete. And so some of the examples of what that might look are the benefits of application controls you would find would be, number one, reducing risk. As I mentioned, automated controls reduce risk by reducing either the impact by detecting early on in the process or the probability by detecting errors as they occur. If you can reduce the number of FTEs required to perform manual processes by replacing those with automated controls, you can reduce costs by reducing FTEs or the number of headcount that you would have. As I mentioned before, the optimal application control would be over high volume homogeneous activities where you remove instances of human error, fraud, or complexities in judgment. But again, that's a challenge for life science companies where there tend not to be high volume homogeneous activities. One of the beautiful things of IT application controls is the ability to enforce segregation of duties and spend authority. So for instance, as I'll say on the next slide here, common application control activities ensure such activity as making sure goods and services are only procured with an approved purchase order, monitoring for segregation of duties based on certain job responsibilities, identifying that goods have been received and as they're supposed to have been. Also, application control, if you have the acquisition cost, the useful life, you can also set so that the fixed asset depreciation is recorded accurately and automatically in the appropriate accounting period. And then, of course, there's such things as the three-way match, right? Purchase order, receiver, vendor, invoice. By assigning an application control, the system can perform the three-way match, and we'll talk a little bit more about that in a moment. One of the questions that I receive constantly is, hey, I'm on QuickBooks. I don't really have application controls accessible to me. That's not exactly true. According to the scholarship article from the University of Northern Iowa, there are at least 25 application controls just from the cuff that this particular author identified in QuickBooks. This is meant to be a busy slide, not meant to be read, but as an example, you can see that there's a ton of opportunities to implement application controls, even if you're leveraging QuickBooks. Now, QuickBooks may not get you through a SOX 404B opinion audit, but for most of us who are on QuickBooks or working in a smaller, perhaps pre-public or a 404A situation, QuickBooks has a lot of functionality that you can leverage to implement controls to reduce risk in this digital environment. The next area that I want to talk about as far as automation is application controls as far as segregation of duties is concerned. The concept of segregation of duties, as you know, would be that the concept that someone cannot complete an entire transaction from cradle to grave by themselves. Ideally, this is enforced logically in the system defined by rules within the specific application. These SOD rules can be broken down as individual application controls within the system, such that you could list them granularly. So you might have an application control that says, hey, someone cannot park and post their own journal entry, or they cannot post an entry to a closed period, or they cannot post a journal entry that doesn't balance. These are the type of application controls that you can call out specifically to address risk as part of your internal control over financial reporting. If your system lacks the ability to enforce segregation of duties logically, and I mentioned there's some limitations there with QuickBooks, you can also track it manually. The example on the right is a manual approach to segregation duties, but instead of these rules being enforced by the system, it's enforced via policy, and there might be some type of detective review to ensure compliance. This is also sort of a handy tool when you're dealing with multiple systems that may or may not be integrated. For example, you may have a bolt-on PO system that works as an ancillary system for your ERP system. And you might notice that in the PO system, there's no segregation of duties issue. In your ERP system, there's no segregation of duties issue. When you combine the two systems together, one may have access in a combined fashion such that then there becomes a segregation of duties problem. There's a lot of slick GRC or governance risk and compliance tools for calculating or for identifying segregation of duties conflicts and analyzing them. Although I'm unaware of any GRC tool that can look at multiple systems congruently in a holistic way. So this manual approach to segregation of duties can frequently be a good approach to ensuring that you have solid segregation duties, even if you can't enforce them logically. I do know of companies that spend 3 to 4 days semi-annually to manually calculate their segregation of duties. For example, the old version of QAD as an example was a system that lacked the ability to calculate that electronically. And the poor controller would spend an extended weekend twice a year to calculate that manually. So if you have a slick GRC tool, it, again, is a much more advantageous approach to it. And Rich, I think with that, it brings us to our third polling question.
Thanks, Steve. So do you employ logically enforced segregation of duties? I like the term logically enforced. So it can, you can read the responses there. I don't think I need to read them to you, but again, this is the third polling question. We'll have one more here in the next 10 or 15 minutes. But Steve, a question did come in while you're talking. It's a good question. It's one that I've heard before, but I would like your input. We are on QuickBooks and expect to go public in the next 2 to 3 years. Is QuickBooks a problem for a public company?
That's a very, very good question. So again, I want to reinforce that there's the differentiation between SOX 404A, which is management's assessment, versus 404B, where the external auditor comes in and opines on the effectiveness of the internal controls. And so I think in maybe the years before Staff Alert 11, again, I'm sorry to get into jargon and such, but it was possible, I think, in the past to be able to get a 404B, get through a 404B audit unscathed, potentially with QuickBooks, just not seeing that to be the case these days. So while you can be public and be a 404A company with QuickBooks, once you exit emerging growth or you become a large accelerated filer and you move to 404B, it is a tough, tough road to say that QuickBooks has the functionality that you would need in order to get through a 404B opinion. So to that point, I would say if you have 2 to 3 years before you go public, you can continue to use QuickBooks, but I would develop some type of long-term plan to move to a more robust ERP. And frankly, for life science companies, in our space, I think the vast majority that we're seeing are moving to something like NetSuite, which is a system that we use a lot and that we're thrilled about working with. So that's a very good question, Rich.
All right, Steve. And I'm not going to ask you what you're watching on Netflix, but I do want to remind people to answer and make sure that you click the button and then hit submit so that you get appropriate credit and get that hour of CPE. So I think we're just waiting on a few. Give everyone about 10 more seconds, and then we can move on. All right, Steve, back to you. So I guess just the results, it's a mix. So, which is to be expected, I guess.
Perfect. Great. Okay. Well, the next area I want to get into, and this is, again, moving into more of a 2.0 as far as controls are concerned, but there has been a ton of excellent functionality that has come to the market in the last several years. All processes have a workflow. It's just a matter of whether they're manual or automated. Ideally, you can take a sequence of predictable and repetitive tasks and process them through an automated workflow. So what is a workflow? Well, it's just a series of predictable and repetitive tasks that process data through a specific path. And you base it on business rules or spend authority so that you know exactly what path the business, the transaction should take. And the beauty of these workflows is they're set up to handle an unlimited number of items going forward. They're only limited by the number of people who can run the workflow. So normally these activities may be performed either piecemeal or done separately, but a workflow brings them all together into one particular approach. And so what are examples of workflow? Well, out of NetSuite, it's just an example. I know I touched on NetSuite a moment ago. So journal entry approval, right? There's a workflow such that one person initiates it, another person approves it, the system records it and processes it. And so, again, the business rules are built in. It can't be overridden. Again, it's based on the business rules that have been entered into the system. Another example of a workflow is new vendor approval workflow. This could be a self-service activity that the vendor performs, or it could be internal within your organization. But essentially, as I mentioned earlier about the manual control to avoid a fraudster payment, this is a similar activity where you approve a new vendor and their banking details by using the workflow. So these are all great examples: vendor bill approval workflow, the 2- and 3-way match I mentioned before, a vendor payment workflow. There's also self-service for HR onboarding, et cetera. A lot of examples of good workflow. But as a deep dive example, the one I like to use the most commonly and that we'll see in life science companies is a purchase order or a purchase request, where you have one person who initiates the transaction, requesting the purchase. It gets routed to the person who is the proper approver, whether it's in that department, or it may need a subsequent or additional supplementary approval based on the value of the transaction itself. And then it may work as a RACI document as well. While it's getting approvals for some people, it's informing others, purchasing department, perhaps the accounting department, et cetera. You could see by not being able to override the workflow and by following the specific set of business rules, you can reduce the amount of FTEs that you would need to process purchase orders and route them through the normal process. And again, 10 years ago, not a lot of workflows that you might see would be strictly limited to, say, an SAP or an Oracle. Nowadays, workflows, very common in NetSuite, also common in various ancillary systems. We're talking about POs here, so Coupa and various systems like that, workflows that work, that are a very effective and efficient tool and can reduce your headcount and can be accessed anywhere in the cloud as well. Another area where you can gain some efficiency and effectiveness in your operations is in scripts. Some organizations are getting away from some of the scripting process, but in computer programming, a script is just a program or sequence of instructions, really a type of coding that takes a series of commands and enters as a single command that's pre-stored in a file and executed sequentially by a program or scripting engine to automate that process. So by toggling a single button, you can execute a series of activities. So an example, I do have a client that has a payroll script where by a single touch of a button, it runs the master data report, converts that data report to a flat file, stores it in a target location, then it has the system retrieve that master data as a flat file from the target location, uploads it into a payroll system, validates the completeness of the records in the report, identifies every single field that changes, and spits it out into a change report. So you can see that there's a lot of individual activities here, but through the touch of one single button, the system has been programmed to run these activities, to run it consistently, and to run it without error. And if there are errors, it will let the user know. But you can see how scripts can be a very potent and effective tool for increasing the effectiveness and efficiency of your operations in there. The last area I'm going to touch on are sort of other tools or automation tools. These are specifically designed to reduce accounting's workload, and they basically work well to automatically certify certain low-risk reconciliations. Automatically, these tools can pull in data, pass it between modules, generate an automated journal entry, perform some type of matching, and validate these entries. What it does is these systems would help to eliminate spreadsheet errors and centralize the financial accounting close process in electronic binders and work papers. These vendors claim that they claim that you'll get a 25 to 65% reduction in time spent preparing reconciliations and manual journal entries. And you can see there's a lot of activities to the right here that can be automated. Some of the applications that we do see that are automated, so for financial close, we have clients that we see Flowcast, Workiva, Blackline. Again, these are for standardizing and organizing documentation. They work as a cloud platform to seamlessly enable collaborations and deep integrations with work streams. What we're also finding is while you might have specifically a financial close software, there is automation that's being built into some of the applications that you already probably have. So for stock-based compensation, as an example, there is automation within certain applications that would allow one to automatically ping for the risk-free rate, or to calculate the volatility, or the strike price, et cetera. So there's a lot of things that these companies can do, or these systems can do, that help save time and effort of your accounting department. Same is true in payroll. We have self-service onboarding activities that integrate with HR, payroll, and benefits, and there's a ton of activity there. And the final area that I would talk about is certain accrual automation activities, such as Gapify as an example, where every month we have you're requesting for the unbilled expenses from your vendors, so you can book your accrual. And there's a system that automatically pings your vendors based on the PO and budget information that they have, and pulls it into the system. Pretty handy, pretty slick, but the key is that it definitely reduces the activity that's required of your headcount, and so frees up time for your accounting folks to do other things. So if you can make these tools happen, if you can implement them with robust blocking and tackling of your ITGCs and effective methodology, and maintain your segregation of duties, you should be in remarkable shape to live through this iteration of the digital transformation. And with that, Rich, I think we have our fourth polling question.
Thanks, Steve. All right, again, as Steve mentioned, the fourth question. So if you missed one before, make sure that you answer this to get to that 75%. What, if any, automation software are you leveraging? Pretty straightforward question. But again, some questions continue to come in. So Steve, I have a few questions for you. We have Workiva for financial reporting. How much effort is it to add functionality for SOX?
Yep. We've done that implementation before with several companies. It is a relatively large lift. It is a process of system acquisition and then, system development lifecycle, where you would identify how you're going to use the system and then implement it. But if you're already using Workiva for the financial reporting aspect, it is still like another completely separate equivalent to system implementation to implement Workiva and to give it that functionality so that you have that single source of truth and it's operating as functionality with the functionality that you request. So it is a pretty significant lift. And again, we remind you to use your IT general controls for SDLC and change management as you do make that change and document it.
All right. Another question that came in, this one I feel the pain. Is there any good software for clinical trial accruals?
I wish that there was some sort of panacea, and I hope you were listening intently to Pamela, because vast majority of the modeling that we see for life sciences, for the R&D and clinical, is on these pretty complex spreadsheets. I'm unaware of a comprehensive tool that pulls that together. I've seen lots of tools that would make sure that you have a complete population of contracts and POs. But as far as a tool to aggregate that information, I'm not aware of a comprehensive tool that can be relied upon that would make everybody's life so much easier. So if anyone has any suggestions, I welcome the comments in the chat if you have. Yeah.
All right. We still have a few more people to respond. So another question that came in. You put up a list of application tools. What are the most common automation tools that you see with life science companies?
Life science companies. So recently, I would have to say that the most common is in the procurement and AP areas. So, without favoring a particular company, I would say very common to see Coupa or a similar application. And again, it runs that PO workflow through and integrates with NetSuite. And so, or you could be using NetSuite's module, but that's primarily as I mentioned, because it's the challenge of being in life sciences and not having a lot of high volume, homogeneous transactions. This is really one of the few areas, as I mentioned, HR onboarding and some of the IT automation you can do. But vastly, I would say the vast majority is in the procure to pay and the PO module.
Okay. So another question just came in. What tools to track contracts have you seen? I've
seen, so not great tools. I'd say the vast majority of the companies that I work with that are using a tool are really using it as an archive. So there is functionality for implementing a contract and routing it for signing and this and that. What I've seen is something like Cobblestone or some other archives where it's a comprehensive archive of it, but it does not necessarily pull data in or doesn't provide any workflow or functionality. In other words, routing contracts for approvals via the spend authority and through legal and those types of things. So not really seeing good functionality there, really more just seeing archives that aren't really too intelligent at this point. I've also candidly just seen them on spreadsheets. Again, another use of spreadsheets, but that's a tough gig from a risk and control perspective to just be relying on spreadsheets for your population of contracts, which is a very high risk area if it's not complete or if there's any error in the spreadsheet, you delete a line. You filter something and you filter it incorrectly. A lot of opportunities to mess that up if you're leveraging it on a spreadsheet. But no, I've not seen a great contract archive with the full functionality we would like to see with workflows and that type of thing.
Okay. Another person, so this is turning into a great Q&A session. Any tool recommendations for automated billing?
Automated billing. Automated billing. I have not seen that for automated billing, and that's a challenge. And again, are we talking on the vendor side of things? We typically, when you see the three-way match, there's still typically a control downstream where someone was releasing the payments as well. So I would see a workflow of that nature, which I think you have in an ERP system like NetSuite. But as far as just a straight up where you get the three-way match and it's an automated payment, I haven't seen that functionality because I think also companies want to have that additional layer of operationally understanding as the cash goes out, and then looking at their AP file to see, well, are we going to pay all of these this week, or are we going to wait and pay some next week, or however that works. So having that extra little bit of control, and also before being able that extra set of eyes before actual payments go out. This is also particularly relevant to when I was talking about that vendor confirmation. But I have not seen a really great tool or something that's reliable for just pure automation for billing.
Okay. All right, well, we got to wrap up here. That was great. And I'll give everyone about 10 more seconds. Make sure you click on the button and hit submit. And then we will continue to move forward. All right, we will wrap it up here. So, all right, there's still about half are still all manual. So we understand, we hear you, but hopefully this information was helpful as you look into the future. And also, just as a disclaimer, we are not recommending any software solutions. Every software decision is personal and specific to company's facts, and we'll actually address that in the third part of our series. And that was just coincidentally a segue into the next two sessions that we have coming up. Next week, we'll be talking about with our cybersecurity team on strategies to improve cybersecurity. And then the week after that, on Wednesday, we'll have our enterprise systems team presenting on how to improve your systems and infrastructure. So we hope that you have found today's webinar helpful. You will receive a follow-up email with links to watch a recording, obtain a PDF copy of the slides if you're interested, and a link to obtain your CPE certificate if you met all the requirements. It's also an opportunity to provide some feedback and request information or suggestions for additional webinars. A post-event survey will also be launched right after I push to the next slide. So I think that's it. Gerald, anything else that I need to do?
Yes. Thank you very much, Rich. Thank you, Steve. Thank you, Pam. For the audience's benefit, if you're interested in going to register in the other entries in the series, a direct link is available to the cybersecurity session in the upper right corner of your user console. That should be a banner similar to the one you see here on the slide. Clicking on that will direct you to the registration page for the cybersecurity session. Additionally, you can also find the registration page for the IT systems session, the conclusion of this series, on the mossadams.com Life Science Industry page. That's mossadams.com/life sciences. Thank you, Rich.
All right, thank you all.
And with that, thank you all. And a webcast survey is now launched in your browser, and we look forward to seeing you all at our next session in the series. Thank you.